So how does a financial institution create a special purpose credit program? Well, it's actually pretty straightforward. And if we could go to the next slide. What you need to do is you need to determine the market need for the program and make sure that it's supported by either internal or external data. You can also include publicly available research or anything or studies that either you've done yourself or others, and leverage these resources to help understand where is the area of need. Then you need to have a written plan, which identifies when the program or who the program's intended to benefit, so the supporting data and evidence of that market need. You need to have procedures and standards for extending the credit, which can include collection of information about the prohibited bases, just to make sure that you're getting it to the folks that are eligible. And then you also need to have an intended duration for the program, which can definitely be updated as you go along. But these programs are typically, they're supposed to be set up with an end date in mind, or having a period of time that it covers, because the hope is that you're able to really make an impact and help folks, again, get more access to credit. But that being said, a lot of times the period of time that you designate, typically folks will continue to reevaluate and likely have those programs available, or at least update them to make it even more approachable for the folks that you're hoping to support and help. And then you also need to make sure that it doesn't, the program doesn't discriminate against any other applicants on a prohibited basis. So there's some pretty straightforward and very powerful things in this. And so it's something that, like I said, it's an opportunity here for banks and financial institutions and for-profits to really not only to take that understanding of the communities they're part of, but to apply it and to really get out there and offer credit in a way that's more approachable for these people that you're that we should be helping and serving. So with that, Jerry, I thought we could turn over to Nicole, or the next up. Oh yeah.
So Adam, I don't want to. I think we assume that people came in with a certain amount of knowledge about this, and some of you may have. But there's a section going on now called CRA 101, and then there's one this afternoon, CRA 102. So they're there to kind of introduce the Community Reinvestment Act to you. So I'd like to spend 2 minutes doing that before I pass it on to Nicole, because Adam's comments were really building on, the existence of the Community Reinvestment Act. So some of you, this is old hat for, and it's repetitious. Forgive me. For those who are new, something you need to know. So when the FHA bill was passed to give housing, help people get housing, the federal government mailed maps to banks. And the maps had red lines around them. Those red lines were around Black and Latino and other minority areas, people of color. And the bank suggested that the federal government suggested, this in the time of Franklin Roosevelt, that they not loan to those areas. And sometimes they're not loaned to areas they were even next to those areas. So it was redlining. And for years, if you were a person of color or you were white and you lived in those neighborhoods, you could not get a mortgage. Your housing values went down, and it was devastating. So starting in lots of places, but particularly in Chicago, where I'm based out of, in the late 1950s, we began to work and organize. I'm old, but not that old. I didn't start until the early 70s, but to move for legislation that would stop that practice. And so the first bill that was passed didn't prohibit it, it collected data. It was HMDA, the Home Mortgage Disclosure Act. And it tracked how mortgages were being given by race. And we still collect it. And what it revealed with this tremendous onslaught of discrimination, which created great disparities of wealth. So following that very quickly, we were able to pass in Congress the Community Reinvestment Act, which required banks to invest in low and moderate income communities of color. And at first, the banks were kicking and screaming, and eventually many banks began to feel really good about it as an opportunity to lend to markets they had not previously lent to. And it's been evolution, and there are issues of accountability, but that foundation is the reason that if you're a housing developer, a nonprofit, it's probably why you exist. Because after that happened, there's a boom in lending to nonprofit housing developers as banks became interested in seeing affordable housing, and that was part of what they were asked to do. They're inspected annually, and they really began to lend in this area, and they began to support efforts like your as a nonprofit housing organization began to support those efforts. So what Adam and Nicole are walking through today is sort of an add-on in some ways, I think, to the Community Reinvestment Act, although it's not the same piece of legislation as Adam pointed out. It's an add-on because there's one of the things that banks and the companies want to do is make sure they don't break the law. Come on in, please. And part of not breaking the law is they're not sure if they can say, well, we haven't lent many, we haven't given enough mortgages to African Americans, and so we're going to start a program and start making more mortgages to African Americans, or to Latinos, or to indigenous people, or whoever. And when they would think about doing that, they would think about whether they were going to be investigated by the federal government for pulling out one group and emphasizing them over other groups, and for making loans based on race. So even though the practice they were doing was to correct something that had gone wrong, they were afraid that if they did it, it was going to get them in the soup to do it. So special credit programs, credit purpose programs said, there's a way you can do this. If it's a group that you feel has historically suffered this kind of discrimination, you can initiate programs, and Adam actually is better on the detail on this, so correct me if I get this wrong, that you can focus a program on that group of people, or in several groups of people who you think might have suffered in the past, and you can name those groups. So the banks were still afraid to do it, and they were very reluctant. And that's beginning to change. Banks are getting a little more confident that they can do it and not cross over any legal barriers. So it's being implemented into their programs. And last thing I'll say before turning over to Nicole is when we work with a bank to do community benefits agreement, they're very large agreements, but only a very small portion of those agreements are philanthropy, or money the bank is giving away. In that sense, a bank operates like any company. They do charitable work. They particularly do charitable work in the areas that they care about, which may be affordable housing. But the rest of what they do is to invest in loan money. And the idea of the work that we're doing here is that the banks don't do that work as charitable work. They do it because they make money. That's good business. And by investing in those markets, those communities will get stronger, they'll be customers, and everybody will do better as a result. So this conversation isn't about philanthropy, which a bank like Umpqua does and gives away money to help groups in lots of ways. But how does Umpqua do its lending? So it's investing money in your communities in ways that creates opportunity and equality for everybody and does good business for the bank. Because a bank which does a lot for communities, and I know this painfully from experience, if they're not making enough money, or even their reserves are deemed sufficiently insufficiently, they will be closed down. And that's exactly what the Obama administration did. It closed down some of the most community-minded banks in the country because they felt their liquidity, and we won't go into liquidity, was insufficient to make them safe. So a bank has to do this work, but they have to make money. If they don't make money, their shareholders will fire them, or the federal government will close them down. So how do you do this investment and make money? And how do you remedy past wrongs by targeting groups that have been historically not have opportunities, not invested in, and that's where it comes in. So Adam kind of gave you the overview, and Nicole is going to talk about how you begin to strategize and how to serve these communities better in a way that's strong for the bank and strong for the community. Is that okay? And would you introduce yourself too?
Absolutely. No worries. Thank you. Good morning, everyone. My name is Nicole Bascom Green. I am the head of community lending for Umpqua Bank. This is now my 8th week with the bank. I've been in banking for 31 years now. And so I have a lot of exposure in the financial industry. So I speak with a lot of confidence about experiences in banking. And that ranged from in the branch space. I was in retail for close to 10 years. I went to mortgage. I was a loan officer for some time, but I spent majority of that time as a mortgage underwriter because I really wanted to know the full life cycle of a mortgage. Because as I was starting to experience life, I'm a Seattle native, born and raised, and the neighborhood that I grew up in called the Central District, which is, akin to Northeast Portland here. The Central District where I grew up, it was 86% Black when I grew up. My family lived there. I had literally over 100 blood relatives in a 2-mile radius. And that was phenomenal for me as a child, but I didn't really understand the reason why we were there till I was older, got to college, was in banking, and started to get more in the housing space to realize, oh, we were redlined into that neighborhood. We couldn't live anywhere else. My whole family was there because that's where Black people had to live in the city of Seattle. And as I got older and other folks from other parts of the region started to realize, oh, this is a central location. We want this space taken back. And it was taken from the community through gentrification. And I know there's some conversation around gentrification helps to lift communities up and provide investment. That's not all true. A lot of it is communities realize this resource and they want it and they take it by force. And that's what happened to my community. So I really wanted to get more into the lending space to understand how this happens, how we lost our community, how do we stop other communities from experiencing this, and how can I do that internally in the bank. So as was mentioned, I just came from US Bank, where I had been for 4 years serving as a community affairs manager, really working in the communities. I covered Washington and Idaho. How do we really be intentional with our investment? Because they gave a great history around special purpose credit programs and CRA, but the redlining was race-based, but all the fixes are non-race-based. How are you going to fix the issue that was broken because it was race-based and make all the rules non-race-based? That doesn't make sense. You categorically excluded Black people, categorically on paper, use the word, but when you make these rules, you can't say Black. You can't say any of those things. You are not going to fix the problem, period. And so special purpose credit programs help us to be intentional and say, we are going to serve the Black community in this area. We're going to serve the Hispanic or Latino area in this community because that's where they're highly concentrated and they've experienced most of the divestment in the community. So that's what special purpose credit programs are born out of. And I'm here at Umpqua Bank to help Umpqua do that. We just had a recent merger with Umpqua and Columbia Bank. And part of that was a CBA that was mentioned. And my department, community lending, was created out of that CBA because Umpqua understood that how banks have been doing is they did not intentionally lend in the communities because of the federal laws that were put in place, state and local laws. So it wasn't just the feds, it was state, it was local, everyone was in on it. And so banks help to facilitate that. So now what the banks are understanding is, okay, we have to right the ship. If we're going to truly be community focused and be a financial institution serving everyone, we're gonna have to be intentional about how we do that. So part of that was the community lending department that was born. I am the head of the community lending. One of my Oregon colleague here, Quaylen Carter, he covers the state of Oregon. And we have 5 currently on our staff. And we are really focused on how are we going to be impactful in our lending in specific communities. So it is important that the folks who are out there doing it look like the communities, speak the language. And so those are some of the things that we in Umpqua are being intentional about, ensuring that we are bringing folks on who are competent, capable, connected, and can speak the language in the communities we need to go into. And so as we work through our special purpose credit program, and as I said, I am very, very new to Umpqua Bank. So our process is very new, but it's very intentional. And that's why I'm here, because I appreciate the fact that Umpqua really wants to step up and say, hey, we're a financial institution, we're part of the problem, but we want to now be part of the solution. And we want to bring people who are going to help us be part of that solution. And so I'm proud to be here to do that. So we're working through our opportunity and how do we want to really focus in our markets, which are primarily Washington or have our we have our audits through our the FDIC is our regulator, I believe. Yeah, U.S. Bank is the OCC, but we all have to give our CRA rating and go through an analysis every year. And to be quite frank, it wasn't great in those communities. It was not great. And so we are here to ensure that we make those changes. So we're hyper focused on the greater Seattle market, hyper focused on the greater Portland market and the Bay Area of Northern California, also Southern California, and then some of the other states that we're in. But we have a focus from our CBA in those communities. So we are really looking to start a special purpose credit program, and we're in that exploratory phase of how do we want to do this right? Because for me, we have down payment assistance, and that's phenomenal. But if you can't get the first mortgage, the down payment assistance doesn't even matter. It doesn't even matter if you can't get the first mortgage. So all of the traditional lending that we see for communities doesn't work for a lot of communities. I know in my community, there's a distrust of banks. Overall, there's a heavy reliance on credit because we have historically had to pay more for things. And so we had to leverage our credit in order to get the little credit we did get because we couldn't get access to cheaper forms of income. I know some of my friends who are in the Hispanic and Latino community share that, they also have a distrust of banks for different reasons. So they keep a lot of cash at home and do things within their families. And there's different ways that we need to be making concessions for how communities bank and how communities, how they are going to be approaching financial institutions. And so we need to be the leader in order to say, listen, you can come here. We understand what it is that you need from a financial perspective, and we want to be that lender. So special purpose credit programs allow us to be nimble and say, okay, for this community, this is what this looks like because they have had these historical barriers, and we're looking to correct said barriers in that community. In this other community, their barriers are a little different. So we have a different program where their access point has been lowered because historically that piece has been one of the main issues. So for me in community lending, that's my goal. I really want to focus on first mortgages, the original access point, so that folks can actually come to the bank and get financing. Because what we do know, and again, back to my underwriting days, I was a subprime underwriter when what hit the fan. And what I knew about subprime borrowers, which is a misnomer, is many of them paid their bills. Many of them took care of their credit. It might have been over leveraged, but there were no late payments. They may have owned a house that somehow they lost it, but they got back. And so, but they were first of all steered into subprime. Let's be clear. They were steered into subprime, not understanding the product they were getting into. And once they did, they lost their properties. But what I do know is many of them, from a credit perspective, from a capacity perspective, they paid their bills. And ultimately, that's what we care about as a financial institution. Are they going to pay this back? And are they going to have any defaults on the loans? And the defaults for most people are low. If we really look at the numbers from our CDFI lenders who do provide lending to low and moderate borrowers, their fallout rates are less than banks overall. And that's because they do specific culturally appropriate lending that banks can do as well. And so through this special purpose credit program, we at Umpqua Bank are really excited to lend our support in that, be a part of the community, and providing a product that's going to be open to the communities that we serve. So as I said, we are very much in our infancy phase. I'm excited to be working with Adam and Guillermo and my other colleagues here in the room to make sure we get that done. And so I appreciate you sitting here and having this conversation with us about taking this back to where you are and say, how can you do this in your community? How can you be a partner with Umpqua? Because we can't do it alone, right? We have to have connectivity in the communities that we want to support. We're still a bank at the end of the day. And so we don't have the necessary focus in some of those communities where we have the relationships, right? So we're building these relationships and we need to do that with all of you. So I appreciate your time and I want to turn it over. I think we're going to have maybe some Q&A, some additional conversation around special purpose credit programs. Like I said, there's not a whole lot to share from specifics about where we are because we're so new in the process, but you just wait. You're going to hear about it and you're going to be like, Nicole talked about that earlier, but we're coming and you'll see it and we're really excited about it. So thank you.
So by the way, you're talking to both Columbia and Umpqua banks now? Because they're one bank, if you did not know that. They've merged into one bank. So if you dealt with Columbia in your community, you're dealing with Umpqua. If you dealt with Umpqua, you're dealing with Umpqua. So I'm going to do something real quick, just to know who's in the room. Be very efficient, please. Just going to ask you to say your name, if you're from an organization, and what part of the state you're from, real quickly, because then I can have a better sense how to address this. Let me stop with, we have other guests from Umpqua. So if you can just talk loudly. I won't, yeah.
Guillermo Sandoval, Financial Inclusion Director, Portland, Oregon. Bill DeLacy, Umpqua Bank, Affordable Housing.
Tim Clark, OHCS.
Okay. Yeah, just
Waylon Carter, the Community Lending Officer for Oregon and Southwest Washington. JT McGrath, Community Livability Specialist, Portland.
Lynn McConnell, Housing Director, City of Bend.
Mohamed Najjar, Washington County Chapter Director at Unite Oregon, a community-based organization.
Did you say you're from Bank?
Bend.
Bend Bank?
Yeah.
Okay, great.
No,
Thank
no,
you.
not a Bend.
Oh, you're from Bend.
City of Bend.
The City of Bend.
Yeah.
Thank you. Okay, I'm sorry. Please. Yes.
Jasmine Mesquita from Vienna Star at Hillsborough.
Hi.
From Minnesota as well.
I'm Tess. I'm from Rooted Homes. We're a community land trust in Bend, Oregon.
Great. Thank you.
Hi, I'm Taylor Robinson from Enterprise Community Partners, Seattle, Washington.
Hi.
Clarence Wessler, Seattle, Washington, Enterprise as well.
Susana Cristancho, OHDC, Hillsborough.
Great. Hi.
Jennifer Chavez, working in operation.
Thanks.
Jennifer Hoffman, Carlton Architecture.
Yeah, I'll tell Martinez or all of you. Yeah.
Ananda Gordon Fugati. I'm a staff planner at Mount Foster Technology.
Yeah. Speak a little bit louder if you could, just for the folks over there. Thank you.
Ross Kanega, Dev Northwest, down in Eugene, Oregon.
Rachel Sneeden, Gorman and Company.
Grace Chang, Affordable Housing Relationship Manager at Umpqua Bank. I cover the state of Oregon. Gina Leone, I am the Affordable Housing Manager at Umpqua Bank, Eastern Portland. I'm Sarah Padilla. I'm with Habitat for Humanity of Oregon. We're based in Portland, but we cover the state.
Matthew Peterson, I'm here for Oregon Multifamily Energy Group.
Joe Johnson, Operations Manager for Elemental Law here in Portland.
I'm Gina Risk. I'm with the Fair Housing Council of Oregon, and I am the Education Outreach Specialist.
Mel Keller, Fair Housing Council of Oregon. I'm located in Eugene.
I'm Matthew Walsh. I'm a policy analyst with the Oregon Health Authority based here in Portland.
So it's so great to do stuff in Oregon. So you ask people something to do and they actually do it. A lot of places you ask them and they might go on for 5 minutes. So this was a good thing. So I have a question for Adam, and I don't want to put him in the spot. So if you don't know the answer, you can throw it back to me. So we have a lot of people here who are involved in building multifamily housing, right? And some for home ownership, some for rental. And I'm sure they're thinking, well, this sounds wonderful, but if we want my community to get mortgages, but if we need more than mortgages, is there anything a special purpose credit program can do for me?
That is a really good question.
Yeah.
So I think that this is something that while it's been around for since 1970s, it's only been the last few years where it's really been the special purpose credit programs have been emphasized and more supported by the regulators and others throughout the industry. And traditionally, they're focused on mortgages, but they're also starting to be used to help with small businesses. And so that's going to be more on the commercial side. And with that, I do think that there's an opportunity to think about for affordable housing for some of these like more complex and bigger projects, it's something that I think certainly could be explored, but it hasn't really been talked about to date that I've seen. And I actually did write even a whole research paper about these earlier this year. I had the opportunity to be in this banking school, and for my my thesis paper, I wrote about special purpose credit programs, and there's a number of areas where banks have been focusing their energies, but like I said, to date, it's been primarily mortgages, small businesses, things like that. But I could definitely see this being something that if your projects are looking to support an underserved community and looking to help them get more into housing and get more stability, I think that if there is certain things that you're running up against with your projects, that this is definitely something that could be talked about and explored. It would just it would definitely be more on the forefront of where things are at currently with this provision.
So we could talk about all different kinds of lending, but the three that are targeted metrically in these kinds of agreements are mortgages, small business lending, and a broad term we call community development lending, which often means lending to not-for-profit housing development corporations for the housing they develop. But there's a lot of focus on mortgages because that's where all the data is. So if its bank is falling behind some of the area, they may not know it, we may not know it, but on mortgages we're going to know because everything's reported. And in the Pacific Northwest, where the price point is so high, it's been particularly challenging. We can say that the groups that we had, in this Asians and African Americans, Latinos, Latinas, and indigenous people may face racial discrimination, but they also face lower incomes often. And the price point then in Oregon or Washington is so high that may be particularly challenging, to make mortgages. And so that is that focus. But there's nothing to say that you couldn't initiate a conversation with the banks about why you'd like them to see a special purpose credit program around community development lending or small business lending. There's no reason that you couldn't do that and that we wouldn't work with you to do that. So I'm going to talk about that a little bit and ask you some questions, but I want to turn back to Nicole around something I think that's very, very key, which is how you try to address culture, as a lender and in terms of your staff, because often making mortgages depends on relationship building and how do you build relationships with people and do you understand their culture. So that's part of the work that Nicole does with her team. So would you talk to that a little bit?
Yeah, absolutely. So, for me, I'm a very forthright individual and that's how I work. And I appreciate that my predecessor at Umpqua, who actually started this department, he was tapped by Governor Newsom in California to do some phenomenal work for the state of California. He was very intentional in picking the team. And it was one of the main reasons I really wanted to come, because in all of my time in banking, I have never been in a space, never, where there was more, until I got to US Bank, I take that back. Well, there was more than one or two people who look like me. And I work for all the big guys. I mean, the biggest banks in the world. And still in the spaces, one or two people look like me, maybe. And so having a team that is predominantly a Black team is unheard of. It is unheard of. And it was something I wanted to be a part of for many reasons, because I want to take, first of all, the stigma out of it, because when we see spaces where it's all white, no one thinks about the fact that it's all white, except for those of us who are Black in the space, right? So when you're white in the space, you don't say, oh, it's all white people, because that's what you're used to, right? I want that to be normal for all communities. When you see a team of Black folks, I don't want it just to be, oh, it's a team of Black people. But we're competent individuals who are here to do the work and do phenomenal work. And my team is phenomenal. And so it was really exciting for me to come and be able to do that. But it was important to the question of people trust who look like them. People want to work with people who look like them. And so we wanted to be intentional in that if we're going to be in these spaces, we needed to have people who look like the communities going into those spaces. And so it's important that we provide that opportunity to have people on the team and also come into a great industry. Banking is phenomenal. It's one of the reasons why I stayed in the industry. It was challenging, but it was worth it. And so for me, it's really important that I can now open the door for people who have historically not been able to have access to banking as a profession. And so these are other reasons why it's important to have representation at the table, because you're bringing other voices that have other experiences that lean in and provide valuable feedback that you wouldn't otherwise receive, to ensure that you're deploying in a way that makes sense for the bottom line, to the point that we are a bank and we need to make money. But we do know that banks, that organizations, period, that are more diverse make 25% more than organizations that are not. And that's on the NASDAQ. That was done by Diversity Inc. 50. So our team is very much we're focused on that. We also are looking for folks who speak Spanish, and because we heavily want to be involved in the Latino and Hispanic communities. And so we want to be sure that we have that representation, but it's key because it's about trust and relationship building. And so you can't do that when you don't have people who look like them doing it. So that was really important for Umpqua's perspective.
Cool. Yeah, you want to jump in? I'm going to open it to questions, but go ahead, because you're part of the bank team. Yeah, please.
I just want to, so one, I get the privilege of being on the inside. So I've been in banking for 20 plus years and my mind is blown at what we're trying to do at Umpqua. It just it has like a advocacy, feel within inside of a bank. But between the lines, it's tough, right? Like I listened to everything you just said, and we have some really great partners in here that I've yet to meet and look forward to meeting. But from what you have to do, right? That's the CBA, to actually happening. Like we're targeting these segments, right? We need to be able to know how to reach the people, right? That these folks are serving and we're trying to serve. My question, because I don't know these questions are ever asked, if I were a nonprofit, you're in the trenches, you're dealing with all the complexities. How do I connect with you to convey the needs of, the different specific needs, right? You're targeting people who have specific needs. How do I communicate that to a bank where it doesn't get lost in the gibberish?
At Umpqua, you can go see Quaylen in Oregon, who asked that question on purpose, because we are very much committed to our partnerships and doing that in community. So Quaylen is here in Oregon. I have Sabrina Smith, who's in Washington, covering Washington. I'm in Washington as well. I'm in Seattle. And I have Linnell Bevels, who is in Northern California in the Bay Area. And they are penetrating those communities. I cannot tell you how often their names come up in spaces. I'm like, yes, they're getting this work done. So lean in. We're on our website. Go to umpquabank.com. Reach out to us if you're in the space. If you're in a state, Quaylen's our contact here. I'm down here a lot already, and I've only been here 2 months. I think I've been down here 5 or 6 times. I'm here. I'm gonna be here. I'm gonna be in the space. We have key partners who are in the space. Guillermo's here in Oregon. Adam's here in Oregon. We have our teams back here who are here in Oregon. We're here to serve and to be partner with you. So if you want to find out how you can do that, please reach out to us.
So
one other thing, also a community at umpquabank.com. You can email that too for questions, and it's used for other things as well, but just to want to give as many inroads as we can.
So Nicole mentioned that her community was erased when she went back to in Seattle. So I went to college in Portland, and when I went to college here, I taught reading in Albina, which was the historic African American community in Portland. And when I came back here, starting 6 years ago, to begin to work for the National Community Reinvestment Coalition in Oregon, I thought I'd go up to Albina to see how it looked. And there was no Albina there. It had been erased, similar to the way that Nicole's community had been erased. So what do we do about that? We advocate. So I want to talk about the advocacy side of this. And I also want to make one thing clear. So we actually, in the course of the CBA, which is usually referred to as Community Bench Agreement, we worked very hard to convince Umpqua to do some special things for both the Seattle market and the Portland market, because we felt that they were behind in lending to people of color in those markets. But I don't want anyone to get the impression that this is just about Metro Portland. And certainly Clint Stein, who's the CEO of Umpqua Bank, would not want that. He's proud of the fact that he grew up in Oregon in a place where it was, what did he say? From 100 miles to the nearest traffic light, I think he says, doesn't he? Yeah. So if you're from a rural community or from Eastern Oregon, don't think that this conversation is simply about the 3-county metro area, because it's about the whole state. So I didn't say much about my background. I won't say all that much, except that historically I'm a community organizer, and I worked in Chicago very early. You can see how old I am, more or less, around the passage of the Community Investment Act and working with banks in this way. I'm also the organizer who recruited Barack Obama to come and try community organizing in 1985 in Chicago, where he worked for me for 3 years before he went off to Harvard Law School. And I worked in the 2008 campaign. Now I'm the senior advisor for organizing at NCRC. I'm working very closely with Housing Oregon, with our national board member, Peter Hanley, who's director of CASA of Oregon, around reinvestment issues here. And so what I want to say is that one way you can move forward in your community around reinvestment issues is to begin to have conversations with banks, to talk to your fellow organizations. If you're in Washington County, Bend and Star, talk to the other organizations in Washington County, et cetera. If you're in Bend, the other organizations in Bend, and then begin a dialogue with banks. Because some of this stuff doesn't happen in a month. It happens in a several-year conversation about what's going to work and what's needed in your community. So feel free to focus, and we'll, I don't want to overpromise the staff of Housing Oregon, but or the board, but we'll find ways to support you if you want to initiate those conversations and say, how do we get a special service credit program on something that we really need here that we're not getting around our particularly culturally specific groups? We mentioned people of color, but LGBTQ could be a culturally specific group. Immigrants as a group could be culturally specific. Religious minorities, who's here from Unite Oregon? I know that you work a lot with the Islamic community at Unite Oregon. Okay, so there are groups, right, that are being excluded. A bank will move slowly sometimes because they're going to move with caution, but you can initiate those conversations. And although we're very proud of the relationship with Umpqua, Umpqua is not the only bank you can push. In fact, Umpqua may be way ahead. There may be other banks you have to be more concerned about in your area that aren't doing perhaps what they need to be doing in your community. So let me stop here and turn it over to you and ask you for any questions or comments you might have, and I'll try to work around the mic, and you can direct them to any of the three of us. I'll let Adam talk first. Direct this to any of the three of us, or if you just want to give it in general, I'll figure out who's going to answer. Adam, please. Yeah.
I was just going to jump into Jerry's point. Like, if there's banks or financial institutions, credit unions in your areas that you are more familiar working with, like, we want to be part of those discussions too, to help with this. In my opinion, this is a very collaborative space, and I know many of us here at Umpqua have a history as well of being very open to talking with other financial institutions and different community groups to find out ways to get these solutions in place. And so, if you're if you have a bank or credit union in your community that you want to talk to about this, and they're like, oh, we don't really know much about it, bring one of us in. We'd love to help.
Okay, please.
Yeah, thank you very much for this discussion. Again, my name is Muhammad Najjar, and I'm from Unite Oregon. And I will just go back to the last point that you mentioned when you talked about Unite Oregon dealing with some of the Muslim community there and the cultural sensitivity also that Nicole mentioned. Speaking of the Muslim community particularly, and a lot of them are immigrants or refugees, some of the conversations that we have been having with them when we talk about like mortgages or like home ownership, a lot of them are interested, and some of them are actually ready to start the process. But the biggest barrier for them is that they're not interested in those interest-bearing loans. And I'm wondering if that's a conversation that It might not be like the demand may not be like really huge, but I think it's a market that is growing. And if the services become available, I think more people would be interested. So I'm wondering if that's something that you're offering at this moment.
So I'm going to give that to you, but I wanted to say that, the banks are working with mortgages according to Muslim law. They're not necessarily mortgages with have no interest, but they're mortgages that are very specifically, there are rules and guidelines into how that interest is levied. So it's not mortgages without interest, but they're mortgages with very specific kinds of things.
Yeah, and
Did you want to
there's
comment to that,
there's
Nicole? Yes.
organizations. So to answer your
Yes.
question, that's not on the radar right now, for at least from a community lending perspective. Not that it won't be, but to be quite frank, we're really wanting to focus on the most impacted communities that have felt this for generations, right? And what we do know is when you fix the problem for the least of these, everyone benefits. Now, I will say in Washington, and we have some partnerships here in Oregon, there are several organizations that do have Sharia compliant lending. I sit on the board of one, Homesite, in the state of Washington. And so there are many nonprofit partners and even some banks who are getting Sharia compliant lending, and they are working through that process. It's, as you can imagine, it has challenges given the way it's set up, but there are a lot of people who are in the space now. And so there may be an opportunity, I would say, reach out to Homesite and see maybe who the counterpart here is in Oregon that's doing that work. But, you know, to be quite frank, at Umpqua, that's not the conversation we're having yet from that perspective. But we do have partnerships in order to ensure that we do have customers who want that. We can give them a warm handoff. To Adam's point, we are collaborative. We can't be everything to everyone. But if we have really tight community connectivity, we can provide opportunities for everyone.
So my answer is a little bit different to that. So if you want to do that, let's gather some Islamic groups. I know that IRCO staff was interested in the same topic. And let's talk about how we persuade banks, including UPCA, to go further than they're now going in this area. We're happy to work with you on that. So other, please.
Short little arms. Okay. Hi, my name's Gina. I'm from Fair Housing Council of Oregon. So you mentioned, Nicole, earlier that there is oftentimes a deep distrust of the banking system within these communities. So my question would be, how are you navigating community outreach around getting the word out about these kinds of programs? And kind of bringing people into that space where they feel more comfortable going to a bank?
That's a great question. And it is my phenomenal team who are out there in the space. And so am I. We're in the community, at these organizations, at these events, having conversation, reaching out, making sure that we're always there. So that it's going to take some time. These people are not going to be, you know, folks are not going to be ready today, tomorrow, maybe 6 months, a year. But if we are consistent in this behavior, so they understand that this isn't a fly-by-night thing. Because to be quite frank, all of this really was born out of the racial reckoning that we've seen in this country, even special purpose credit programs. To Adam's point, they've been on the books for 40 years and no one touched them because they didn't want to be quite frank. So now there's an opportunity to do that. So we're leaning in. Some banks are doing it in a way that they realize, listen, we weren't a part of that process. We want to be a part of that process. So I'm really excited that we have a long-term strategy at Umpqua. This isn't just kind of a flash in the pan situation here. So we are looking to have long-term relationships, being in the space, making sure we're having those partnerships. And, you know, we partner well with Guillermo's team because they are the community engagement officers, and we work collaboratively to ensure that they see us all the time, consistently, in perpetuity.
Thank you. Just wanted to add to that real quick. We also have something that the NCRC helps put together, which is, and Guillermo leads this, it's a community advisory panel. And there's 16 organizations that have been selected that are part of that. We always want to, though, connect with more. It's not just, you know, those 16, but, you know, that's at least a dedicated group right there that we will continue to collaborate and even report to. So yeah, there's definitely multiple ways.
Else with a question or comment? Oh, please.
So one of the things, I'm always looking for application, right? So there's a lot said. So one of the things that we've started doing is looking for what are the needs that community that you're serving has. And so there's a lifestyle that these folks have, and what we want is wealth building in these communities. And so we have wealth building events, and we will talk about the things in a way that is culturally specific, and we bring the culturally specific professionals. And even if we have to partner with another institution to do that, we will do that. And so your feedback and your insight to what's going on in your community will help facilitate how we can put together a space that the community feels safe in to be able to deal with the needs. And then we learn, you learn from it, and then we try to bring the resources to it.
Hello, I'm a homeownership program manager with a community land trust. So I work a lot with clients trying to get mortgages. And I'm just curious, with the special credit programs, what does the back end look like? Are these loans sold on the market? Are they in-house? Because a lot of times what we run into is lenders saying they can make something work, and then the underwriter comes in or Fannie Mae comes in and says no.
And that's the difference with the special purpose credit program. Many of them, so I left, coming from US Bank, there's a portfolio for a lot of them, like the Sharia compliant loans. They're not sold on the secondary market. They can't be. So they're portfolioing those loans. So some of them will be portfolioed. Some of them maybe have Fannie Freddie guidelines. But what's really exciting is the FHFA, HUD are starting to make changes on the secondary market with the GSEs to ensure that these SPCPs can start to be sold to them. And so there is a secondary market for it. So there's a mix depending on if they're doing it to the Fannie Freddie guidelines, or if it's something that putting it together, it's going to be portfolioed, and there's space for that, because we know there is jumbo loans are portfolioed. I know I was a jumbo underwriter for 10 years, and many of them were portfolioed and held. So there is opportunity from a financial institution, and they make money still in the portfolio. So, there are options depending on the financial institution. Each one is different and they're unique. And so they choose which way they want to approach that based on their program.
So I think it's clear from what Nicole said, but just to reiterate, a portfolio loan is a loan the bank will hold on to and not sell, which is something they need to do to make more mortgages. They have to replenish capital, so they have to get rid of some assets to do that. But I'd like to say moreover, so our experience is that when banks are reluctant to loan to land trusts, it's often because they don't understand them. So the first thing you have to do is someone in the bank who understands land trusts, so they want to make loan. Bankers will not lend to something they don't understand. So the solution is to get them to understand it. I'm not talking about Umpqua, just in general. So they have to have staff who understands the loan vehicle. Once that's in place, if they won't loan to land trusts, then come to Housing Oregon, come to NCRC, and let's sit down with that bank and let's change that. Because in Oregon, we have to find new ways to look at home ownership, right? We have to look at land trusts, look at co-ops. The price point is so high, as all of you know, whether it's rental housing, right, or home ownership, that we have to find creative ways, right, to make them more equitable. But if you're not getting a response, let's gather with other land trusts. And let's begin to talk. Excuse me, I'm sorry.
Hi, Rachel Sneathen with Gorman & Company. We're an affordable housing developer. I was really curious to hear a little bit more about the types of commercial small business lending that you're trying to focus in with this program as well. We partner with a ton of minority developers, as well as nonprofit groups with resident services. So I'm curious how we could help support that.
Well, I can give an example from Washington. We have what's called the Black Home Initiative, BHI. And part of that is really a systemic change around homeownership and lending from supply to demand, right? So from the rooter to the tutor, as my grandmother used to say. We're trying to do a complete overhaul, and we are focused in Western Washington. Part of that is supporting Black developers who initially haven't had access to capital, and they haven't been players in the space. So we've set up what's called the Field Order 15, which many lenders are leaning into. We have funding from different organizations to help support that. And so I'm actually using that as a catalyst to see how the Field Order 15 works. And just a little history about the Field Order 15, which I love, is Field Order 15 was given by General Sherman after the Civil War. That was the 40 acres and a mule. that all of the previously enslaved were supposed to get, and that was pulled back by Jackson when he became president. So we named it Field Order 15 as a representation of that history to help support Black developers get to that space where they actually can compete and have it's the pre-development issue that they can't get access to pre-dev costs, right? And so the pre-dev they can't get access to, and once they don't have that project penciled out, the bank won't lend. So we're working on a way through Field Order 15 to get them prepped so that we are going to be a key lender, UMQA, to help support that through, my hope is a special purpose credit program, but also just maybe traditional lending. How can we help to support that? So we don't have those answers yet, but know that we're working through those processes. And this is an active program that we're working on. And I'm on the core team, so I'm very dialed in this work. But to your point, because in community lending, we are not just about home lending, we're also about small business and specifically micro businesses, because most, Black and brown small businesses are micro businesses. They make $500,000 or less. In the Black community, 97% of businesses are a one-man shop. And so we want to make sure that we are supporting those micro businesses through small business lending, and special purpose credit programs can do that. And so we are piloting that in the Seattle market to hopefully, push that down the coast is really our goal.
Thank you. Just wanted to add to that. Yes, as Nicole was saying, we're definitely focusing at first on mortgages and single family. But that being said, there is small business programs, and the Beneficial State Bank actually has done some really great work in this space to even collect additional information. I'd love to get your contact info, because actually I have some, they've provided documents that map out a number of different programs. And a lot of times when on the small business side, what they'll look at is even some just conventional lending, like conventional small business loan, and they'll look at things like the LTV or some other underwriting characteristics and really study the groups that are having a hard time getting access to that credit, and where additional considerations should be made. And so it's there's definitely work that is being done in that area, and there are some programs, and I could get you that information.
And one of the metrics in the CBA is the CBA asks, so the way the CBA works is if we're working with a bank around a merger, then folks are tired of hearing this, but we say that 1 + 1 = 3. That is that the merger of Columbia and Umpqua shouldn't just give you Columbia and Umpqua's current performance. Because they're getting bigger and more important in the region, they have to do better. So instead of doing just 2, they need to do 3. So there are metrics that aspire to push the bank higher than where it's been. Those metrics aren't just with mortgages, there was small business lending and small business lending to people of color. So that's very much on the table, and it's something you might want to dialogue with the bank about. Are there other, we're nearing the end, but we have a little more, it's a few more minutes more. Anybody else want to jump in? I miss hand? No. Okay. So while people are kind of letting you know about stuff, in your packet, there's a card that says sign up for the Oregon Reinvestment Coalition mailing list. Get a chance before you leave the DoubleTree, fill it in and give it to Housing Oregon, and we can begin to post those opportunities with you, or reach out to Housing Oregon staff, and they'll put you in touch with the coalition and say, I'd like to get together with some other Islamic leadership and talk about mortgage to our community. I'd like to get together with other groups in Washington County, other groups in Bend, groups that are focused on small business, groups that are affordable housing, and begin to initiate more conversations with their banks. And then you'll have those conversations. And then if you're having those with Umpqua, you may work back to Guillermo, who's out in the community, with a team of people, looking at community issues and problems and how the bank can respond. Thank you very much for attending this. I'm going to just give it back to Nicole and Adam thank you all both for being here and doing this. And then you'll have until 10:30 to get to your next workshop. But let's give Nicole and Adam the final word.
Well, thank you everyone for being here. This topic is near and dear to my heart. for many reasons. And I appreciate you being here, having this conversation with us. Like I said, if you have any questions, please feel free to reach out. We are here to be a community partner with you. And so we're here to help elevate the work. I truly believe, and Adam is absolutely correct, there is no one institution that's going to get this done. So we are open to collaboration, and important for me is that we are lifting up community. And so it requires everyone to do that. So know that we're here. I really appreciate your time, and I will hopefully see you later in the day.
Yeah. And just wanted to say again too, like when I think about this whole financial system, yeah, I think about how it seems to me very tiered, right? Like there's you have some subprime lenders, sometimes doing these loans, certain kind of lending, CDFIs that provide loans, and then you have banks who are traditionally rather conservative, and we want to push that and get not even because it's more risky or anything like that. As we've seen, it's not. It's just the right thing to do, and so looking forward to working with you. Any of you on this, as we move forward.
Thank you both. Can I give it back to you later today?